of options. I'll kind of, okay, so I trade options about 3 to 4 times a week or a month, like I said. So I'll kind of give you guys maybe a comment here or there, but I want to give Shark the main section of this to just talk what he thinks a beginner in options should know and a beginner in options should follow the rules. So Shark, the kind of the floor is yours. Give them what you want. Tell them what you think is necessary, and so go ahead, my man.
Sure, sure. And if you guys have, I mean, since you guys are, like you said, you have some, a very small experience, or and if you have any questions, because basically that might be you, listening to this podcast on the other side. If you have any questions, you can certainly, chime in some. But a few things that I think are the most important are that, you know, one of them mostly is, first you need to obviously understand a basic understanding of the Greeks. And at first that's really intimidating to a lot of people. I remember when one of my good friends, a great trader, Bearfucker from Atlas, started telling me about options, oh, you should learn about this. And I said, oh, the Greeks, what is this? Delta, Vega, Gamma, oh my God, it was very intimidating and kind of turned me off to it. But they really aren't that complicated. And there's many, if you just type in the Greeks, there's many, and in Google and you press images, there's many, pictures there that just gives you a really simplified breakdown. The ones that I really pay the most attention to, and they all have their worth, they're all valuable for different types of strategies, but I'm talking about a very basic, directional type of trade, buy calls, buy puts kind of situation. I'm not talking about spreads or, iron butterflies or anything like that. But but I'm mostly looking at the volume, on the day. You want to have a liquid, a well-traded option. I'm looking at the delta, and that is, how much money you're making per dollar move. So I'm always looking for the highest delta possible. And theta, which is how much time decay you're getting on you're incurring on your option, because the second you buy an option, it's basically like driving a new car off the lot. It's a depreciating asset. So you want to know how much you're losing per day, because you could lose Tesla is one that's like crazy. You can lose $1.35 per day on your contracts if the stock doesn't move in your direction, and and that can be a real burner on your premium. And the IV also too, which is not technically a Greek, but very important, because the higher the IV on your option is basically like an artificial pump. Market makers, if you have a high IV, basically implied volatility is what that means. Your options contract will be higher because of this artificial IV pump. What can happen if a stock stagnates or goes sideways is that the market makers will start to take down that IV, and your contract premium, whatever you bought it for, say you bought it for $1 a contract, which is $100, will just start to decrease out of nowhere. So that is what, they call the IV crush. And that's why, especially, I don't like trading options on earnings. And I think that's another thing that new options traders can do. All I have to do is they're going to have a great options. They're going to have a great earnings report. It's going to go up, and then you buy the option, but you don't realize that the market makers are in ahead of the earnings report, putting in this artificial IV pump on the option. The next time the stock goes up, but it only goes up 4%. The market makers might have priced in a move of 6%. Well, it didn't make that. So what are they going to do? They drop the IV, and your options gets completely crushed by the
Then.
And you really can get hurt on that. So number one, learn the Greeks. Those are the ones that I feel like are the most important. The other ones, again, are important. They have their, they are valuable to know, especially in other types of strategies. But yeah, the delta, the IV, the theta are really the one, and the volume are really the ones that I pay the most attention to. Other than that, Another thing that I think, especially with the Wall Street bets and even with FinTwit to a degree, can feed into this is picking options that are way far out of the money. Oh, I just got $900 Tesla calls, and now I've made $50,000 or something like this. When you're getting these way far out of the money contracts, it is just a gamble. Your delta is shit. And if the stock moves against you, you're going to get hit even harder and the losses will be even bigger. So the other thing is don't get, it's always better. I always play either at the money or in the money calls or puts. Those are the safest. So don't get lured in by these huge gambling bets that you see online.
So just a quick thing. So like when we're talking at the money or in the money, we're talking if a stock is at $100, you're playing an option where the strike price is like at 100 or at like 95, correct? Just so everyone knows. Because like if I'm buying like $100 call when the stock is at 80, it's out of the money. So it's a little harder, I think, is what he's saying.
Exactly.
Okay.
Yeah. So in the money would be, further back, if it's 100, then it would be, 99 or 95 or whatever. And then at the money would be 100, and something like that. So, definitely. The other thing to keep in mind and what is useful is knowing each stock's kind of ATR, average true range. A good example of this or a good comparison of this would be, Apple versus say a growth stock like SPC, which, I traded today, or Fubo. Apple, a big day for Apple is a 3% gain, a 4% gain. That's a big move for Apple. Whereas Fubo or PLTR or Virgin Galactic, a big day for them could be 8%, 7%, 12%. So if you're picking it out of the money option, understand the personality, the way, the stock moves, because you don't want to be trading Apple at, when it's $150, you don't want to be picking the 160 or the 165 calls because the stock just doesn't move like that. And you're really putting yourself at a disadvantage.
That's actually a really good point. Like if exactly. I never thought about that before. So if I know Zoom moves from like 290 to 310 constantly, which it doesn't, but if I knew it did that and I thought it was going to break out of that to like 299 to 300 range, I knew it had room to move to like 310, blah, 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 blah. But if I was betting against that, say it was at like 305, 307, and I wanted to bet that it was going to make a move upwards, I know that it moves to 310 and then moves back down. Like that's a great point that you just made, that don't bet against that daily range that it has, whatever it is. That's a great point. So that kind of helps me understand a little more of how people scalp options, because I know a lot of people scalp like Tesla like that, because Tesla moves pretty well. They take those like 1% moves, and an options move will be quite a bit more than that. So they'll take that 1% move off Tesla and scalp it. But that's perfect actually, because I was kind of figuring out how people scalp large caps options like that. How do you kind of screen to determine which stocks you want to maybe take an options play on during the beginning to the middle of the day? Like how do you kind of determine what's a good setup versus a bad setup options wise for a large cap?
That's a great question, actually.
Sure. Well, definitely, I'm just like small caps, you're still looking for a catalyst, so if it has initials, something, a news event or an upgrade or something like that, it's definitely going to put it on my radar, throughout the day. And then after that, I mean, I think after, I have to say also experience, after trading for a while, you're going to get to know how some stocks act throughout the day. Some might flag and then break down only to curl up later in the day and make a new high. So understanding how stocks, also how each individual stock might move also gives me a bit of insight onto, what to trade. But yeah, I mean, just like small caps, I'm looking at catalysts. I'm looking